Eric Muladi, and we are talking about learn when to sell or short winning stocks. So a very, very cool presentation today. I think it's very appropriate for what's going on in the market right now. But before I get to that, I wanted to talk about Eric and let everybody funnel into the webinar here today. If everybody can do me a favor, can everybody hear me all right? Let's get a type into the chat Y for yes, N for no. Can everyone hear me all right now? I want to just make sure we got the sound all set. Cool. Jeff, thank you. Good to see you here, buddy. Jake, Peter, Arturo, Derek, Tim. All right. And I got a nice little smiley face from Jeff. All right, guys. Let's give everybody 2 more minutes to file in. So make sure you got your notepads out, take notes. You got your computer screens all set up, and you got the kids put away for right now, and the dog sitting next to you, but he's not going to bark, all right? Real quick before we get started here, I want to talk about Eric because I brought Eric on a while back, and Eric is one of 2 traders here on MarketFi that is a little bit unique. And what I mean by that is he is a self-taught professional trader. Okay, so most of the mavens on the site are usually coming from like the CBOE, working on the floor for 10 years. That's the Chicago Board of Options Exchange, or they worked on the NASDAQ floor, then the pits, or they worked with these big prop firms for a long time, and now they're doing it by themselves. Eric is unique, and we also have another guy, and they're both fantastic, that they taught themselves. And what I love about that, what I absolutely love about that is that's most of us, right? Most of us are not professional traders in here. Most of us, you're just sitting there because you want to learn more, and you want to be able to make money by trading the markets. The same thing as me. So that's what I love about it. But just to let you know, and anyone that's a first-time MarketFi trader in here, everybody that we place on the site and to run a product is vetted by us. So they go through usually a 30 to 60-day process of us verifying their trades, looking at their strategy, making sure that their offering and their communication is really good. And it's not just really great strategies that are on here. We make sure they're great people because what I have found, being the president of Benzinga and MarketFi for the last 4 years, is really great people and great traders are what makes a really great product, not just really great strategies. So, Eric, and I'm going on the 3rd line now. He's been a full-time since 2002 running a subscription-based newsletter at Multivariate.com. You can check it out there as well. He also keeps it on MarketFi. He teaches a lot of technical analysis, and we're going to be talking a lot about that today. He also coaches and consults for institutions and traders like yourself. And we launched him back on August 16th, but he's been trading on the site for, I believe it was like 40-some days before that as well. So known Eric for a few months now, and really glad to get him on the site. Here's what we're going to learn today. And it looks like we got almost everybody in here. What we're going to learn is when to get out of winning markets with stocks and ETFs. And Eric will actually, I just asked him before we got on here, I said, Eric, what are you in right now? What's your portfolio look like? And he'll talk about that in a little bit. When to short strong stocks, which is a very, very important lesson to understand if you're playing the reversals. And then the 3 visual aspects to watch for, and I think that's what everyone's in here for today, those 3 visual aspects. We're going to go over that for 30 minutes, and then we're going to have a 5-minute Q&A, and we also have a special offer for everybody in the webinar today, as Eric just got on the site August 16th. Disclaimer, and this is really important, folks, and we're getting started in 10 seconds here. All of this material is for educational purposes only, okay? Do not go take this and start trading it with real money and expect to make a bunch of money. You need to learn this stuff. You need to paper trade it. You need to consult people and like your broker, and you need to understand that nothing is a guarantee in this market. If anyone ever tells you that, send them to MarketFi. I will vet them out because they are lying. Eric is not a registered financial advisor, nor does he desire to be one, and past performance is not necessarily indicative of future results. Having said that, we do verify, and you can see in the top left, portfolio verified by MarketFi. We verify all of Eric's results on the site, so you can see since he's came on his performance and what his subscribers have been able to get in terms of being on the site. And like I said, he actually places the orders on MarketFi. My system that we built here actually verifies them by checking the prices in real time and making sure that you're able to get in at the same price. And then when he exits, we make sure that is the actual price, so he's not faking his results. So, having said that, Eric,
yes.
I don't think they want to hear me talking anymore, brother. How you doing?
I'm doing very good. Hi, is everybody? Hope everybody's having a good day. Thank you very much for that introduction, Kyle. I've been excited about this webinar because the market is extended here, and so wanted to discuss about some of the things we can be looking for just in case this market decides to take a pause. So Kyle, thank you very much for that introduction. So from here I can take it on, right?
Yeah, I'm gonna go. I'm giving you the control of the screen right now.
Okay.
So you are taking that over right now. It should ask you to accept it.
All right.
And
Tell me
everybody,
what.
one last thing, folks. I'll be in the chat for you. So if you have any questions for Eric, I'll be moderating those for him and bringing those questions up to him. So please feel free to ask everybody in the chat. And Eric, before you get started, I know everybody heard me, but can everybody hear Eric real quick? Go ahead and type in yes in the chat box. I want to make sure the audio is okay.
All right. Can everybody hear me pretty good? Oh yeah.
All right,
Good.
looks like
Okay.
we're good, buddy. All right, Eric,
Awesome.
take it
I
away,
love
buddy.
it.
Teach us.
Okay, so the thing is, we are trading at these lofty prices as far as the market is concerned. As you can see, this is my performance, but let's go to the market right now. And the market has been on a major run, as we all know. So the thing is, why should anybody move their money when everything seems to be working? It's a good question. In a perfect world, we all want to get out of the roller coaster at the end. The thing is, you never know when the top is going to come in the market, but you have to be prepared to look for the visual signs. And so we have to train ourselves to identify when this great marathon in the market is going to be over. So when is this market going to be over in terms of the marathon? That's very hard to tell, like I said. And the fact of life is we are always going to be trading blind in the market just because that's the nature of the beast. And so you can see that even though we are trading every day like today, nobody knew where the market was going to close, up or down, always very confusing. I don't remember a time ever when the market gave us a clear signal to go long or to go short. People say it's a buyer's market, seller's market, risk off, risk on. I mean, all these are just things we all say, but ultimately, whenever we place a trade and hoping we get the direction correct, but we never know where the market is going, so we trade blind, and that's just how trading is. But we need to have tools that can help bring some light into what we are doing and shed some, give us some direction of where the market is leaning. And that's the kind of thing I'm talking about here. Just have a sense of where the market is going visually. Okay, this is a chart for the S&P 500 since March 2009. The market is up 156 points. And so, of course, the big question here is, are we going to be moving beyond 1700 on the S&P 500? Is this market oversold? Should we stay long? These are very important questions because if we're going to make money, we need to be able to identify major turn points. Now, if the market goes down 2-3% and then continues making highs to 1700, 1800, then, it's okay to stay long. But what if the market has the next big move, market ends up trading, 1200 or 1300? We want to be prepared for things like that. And this webinar is going to tackle that very important question of where the market is trading at right now. So let's take a look. Let's go back. This is the market in 2007, 2008. And as you can see, this was a major high in the market, late 2007, 2008. And it would have been very nice for all of us to have been able to know that the market had peaked at the time. Of course, we have the luxury of looking at the charts in hindsight right now, but this webinar will try and make it easier for you to have seen the highs of late 2007 and also what were the red flags that the market was showing. And this webinar is going to be discussing that. Let's take a look at a stock like Priceline. This monster stock has been up almost 2,000% since the 09 lows, 08 lows. An amazing moving stock. Of course, if you're long the stock, you'd like to know whether you should stay, for the stock to break 1,000, or if you want to go short this major mover, where do you go short? So that's what this webinar is going to be discussing, such major movers in the market. Like I called this webinar the market's best moving stocks, when to sell them and when to get out or when to go short. All right, let's take a look at Apple. Now, right off the bat, I'm sure most of you don't notice this, but this is a weekly chart. and it shows the move in Apple from 2003 to 2008. That was good for almost 1800% in 4.5 years. A big move. So could the things we're going to learn today have helped you lock into this profit before the drop in '08? So that's what we are trying to learn here. So could what we're going to learn today have helped you stay in this stock for as long as possible? And could the tools and the visual aspects I'm going to be discussing here, would they have helped you to get out of this stock or to short the stock in late '07 or early 2008? All right. Now again, the same stock, but now we are looking at it from the current market. Of course, Apple peaked in 2012, and this is a current chart. So after a 600% gain since the breakout in 2009, this is what the chart looks like. Of course, the stock's been down. Everybody knows that. People are interested to know whether they need to get back in the stock. I'm not going to necessarily be covering whether it's a buy right here, even though I do discuss that, and I'll tell you when I do that in a follow-up to this webinar. Is what we are going to learn today, would this help you to get out of this stock above 700 or closer to 700 as possible? All right, so let's take a look at another stock here, and it's for silver. Silver had a major run 2010-2011 time period, breaking out here from about $17, $18 and going all the way to 45. Now the arrow I show here is where we went long this name or silver about 2010. So again, what I'm looking to try and show you here is that there are methods we can use to get out of these major market moves with a profit, lock in a good profit, or initiate a short position. Everybody right now wants to know about Tesla. Stock's trading at about 170, give or take. Everybody wants to know, they short the stock, where do I get out if I own any stock? So what I'm saying here is we're going to try and see whether we can find a way or a method that can visually, using the three aspects I talked about at the beginning, that can help us get out of this name whenever the time is going to be ripe for us to get out of this name. Now, of course, technical analysis as a science is not perfect. So just understand that even though it is a method, like any other scientific method, it does have its own issues. There's going to be some adjustment and some level of learning curve. Just like Kyle said, you do need to study these things. What I'm showing you here is just a summary. And remember, this is what I do every day. When you become a subscriber, this is what I do for you in the back. I look for ideas for us to go long, go short whenever the opportunities are ripe. Okay, so we are going to try and combine simple factors. And when it comes to time to implement what we're going to be learning here, sometimes it's going to take one red flag to go short a stock, and sometimes it's going to take a combination of one or two of the red flags we are going to be talking about. Keep in mind, let me go back there. At the end of the day, remember, as traders, we are going to always be trading blind, and what I'm going to be showing here is not a perfect science, but just a visual tool to help us understand how to use the monthly and weekly charts to get out or in of a stock, or to get out of a stock if we own it, and to get in terms of shorting the stock or selling the stock for a profit whenever it's time to go short. So drum roll, please. Okay, so why don't we go to the meat of this webinar? And on a weekly chart, the very first red flag is a failed weekly breakout. And what I mean by that is, after the market has made a high in the price on a weekly chart, give it about 2 weeks of rest minimum, and then it tries to move to new highs and subsequently fails. Once it moves below the previous weekly closing high, you want to use that as your entry point to get out or as your reason to go short. So that's the first red flag right there. Okay, so let's move on here. So now the arrow, the red arrow number 1 is where the breakout fails, and the arrow number 2 is when the stock moves below the 10-week moving average. Now I have to talk about the fact that, so the stock fails to break out, moves below the 10-week moving average, settles down for at least 1 week, which is the black arrow, and then the subsequent move lower the next slide, as you can see now, the purple line here, this is where you want to short the stock. So we have a move below the 10-week moving average. The stock settles down, tries to rally back above the 10-week moving average. So that's your second red flag. Remember, there are three visual aspects. This is the second one of the three. Okay. So now, point number 2 is where you want to go short or where you want to get out of your position, because you have two red flags: a failed breakout now, move below the 10-week moving average, and a fresh break of that recent closing low on the weekly chart. So let's move on here to the next one here, and it is now I'm giving you the third red flag. As you can see, the third red flag is the crossover between the 13-week moving average or the 33-week moving average. Now, on the slide, I show the 10-week moving average or the 34-week moving average. It doesn't really matter. They're pretty much the same. I use either, and you can use either, but it doesn't matter. The most important thing is that crossover between the 13-week moving average and the 34-week moving average. And you can see there's a green arrow at the bottom there. That's when there was a buy signal to go long, and this is a multi-week, multi-month setup situation. So once you see that crossover for a stock you own or for a stock you want to short, this is where you want to initiate your short position. So we've covered those three red flags. They're very simple. Sometimes you have to use one, sometimes a combination of one of the three. Okay, today we know we are all beginning the new season for the NFL, and as you can see, it doesn't come very easy for somebody to stand in front of a podium and be announced as the champion. Think of all the effort, the planning, adjustments it takes for any team to become champions of any event. Think all the plays or the setups that these players have to memorize and all the adjustments they have to make throughout the season. It's just like, in a way you look at it, it seems like that's what we have to do as traders. We experience challenges, situations change, but ultimately we have to keep a goal, we have to keep working hard. And in this particular example, I like using this NFL as an example because they do have visual plays, they have plays, and so I have shown you three ways you can short winning stocks or get out of a market, general market, or to go short a general market, or to go short a stock. And this is going to work in any market anywhere in the world, so just keep that in mind. So let's go back here, and just to go back and revisit what I just showed you in a quick minutes here, is you'll notice points labeled A, the 3 points labeled A, and I'm going to show the next slide. Those were where you should have initiated your short position, and now I'm going to show them with the arrow there. Okay, now I don't show the very top. The top failed breakout was also an entry point. The failed breakout was an area to go short or get out of your long position. Of course, you see the first red arrow was a point to get short or get out because it was making a fresh short-term weekly low. And then the second arrow in the middle there was another entry point to the downside. And of course, the third arrow is another entry point to the downside. Hope you can all see that. Same thing here. Now, the thing I want to talk about on this slide is, initially it's not very obvious, but what we are playing here is the band of that 10-week moving average or the band of the 13-week moving average. Once it starts rolling over is when you start anticipating visually that the market is running out of steam and that the market needs to be faded or needs to be sold. So we are playing the fade or the band of the 10-week moving average because we see that down the road, with every subsequent break of the weekly chart, every subsequent move lower means that the 10-week moving average is going to bend, and ultimately we are going to get a crossover between the 10-week moving average and the 34-week moving average, which is, like I said, a major sell point in any stock that has been doing well, or a major sell point in any market that has also been doing well. Okay, like I said, it's not a perfect science, but we're going to take a look at some examples here. The one thing I can say about this method when I use it, and if you start using it, or at least if you start insisting that you see this method before you go short a winning stock, like Priceline or Tesla or even Facebook that is doing well and many other stocks that are doing well, is because you have an expectation for the stock to show you the band of the 10-week moving average, failed breakouts, fresh move to weekly lows. It buys you reason to be patient. This forces you to be patient, and it forces you to have some timing aspect. So if you bring patience to your trading, and if you bring some level of timing, you're going to make mistakes. Yes, we all do. In other words, it's not mistakes, it's just that the market decides to go the other way. But it buys you time to be patient, and it also helps you with your timing. Okay, so let's begin here by taking a look at the S&P 500, and I'm going to take you back to 2007, 2008. And you can see the topmost arrow. The market had tried to break out above 1550 on the S&P and failed. So that was our first major inkling that the market was not healthy. That failed breakout would subsequently, as you can see here, there was a crossover. This arrow, the arrow here with an X shows a crossover point. That was another indication that the momentum was changing. Notice that the 10-week moving average was already bending. And I also have to note that by about November, December of 2007, even the moving averages were making multi-month lows. Another red flag there. But the best break comes late 2007 when the market moves to new weekly closing lows. So by the time we begin 2008, the market had already flashed our 3 visual signs to get out of a strong market. Okay. Also notice here that in 2008 May, the market did try to take back that break point and failed, and that also happened to be a very nice point of going short the market at that time. Let's take a look at another example, and it's just an example I picked out. This is an example for Boeing, 2008. Notice it broke down and failed to hold a breakout level when it tried to move above 103, somewhere in that area. It failed, so that was your first red flag. It then had 2 down weeks that moved it back below the 10-week moving average. Notice that the 10-week moving average starts bending, and then we have the crossover between the 10-week moving average and the 34-week moving average. And then the lines I show in red there, the horizontal lines that I show in red, they are the breakpoints to new weekly closing lows. And every break of those lines shows that it was a nice time to get out of the stock or to initiate a short position. So as you can see, the things that we are learning here or discussing in this webinar could have helped you get out of Boeing in 2008 before this major drop. Let's take a look at a world market here, and it is for the Brazilian market. Now the Brazilian market, as early as July of this year, was down almost 41% from the 2010 highs. That's an amazing drop. Remember, world markets have been close to all-time highs. The US market has been leading the world market as it was trading and is still trading close to all-time highs, but the Bovespa has not followed through. If you go back to 2010, late 2010, notice the failed breakout in October, November time period. There was a failed breakout. On the weekly chart, it failed to break out again in the beginning of 2011. That was another red flag, reason to get out of that market or to be very cautious. Remember, the stock had a nice run from the lows of late 2008 and now was showing failed breakouts late 2010, early 2011. Notice now that we come and form a bending 10-week moving average. We also have bearish crossover between the 10-week moving average and the 13-week moving average in April of 2011, and then there was a weekly break point sometime about May of 2011, and once it broke down there, that was a nice time to have gone short the stock, and actually it had a very big drop in terms of percentage, moving from about 65,000 to as low as 47,000. So big drop. So that is the kind of move I'm talking about. And using what we talked about here, you would have been out of that market, and it would have been very obvious that you needed to be out of that market. Okay, let's take a look at Apple 2013. This is a current chart on a weekly basis, and you see that there was a failed breakout sometime in October of 2012. This failed breakout, after it had broken out in August 2012, made new highs above about very close to 700, but eventually broke down. Now once it breaks down below that red line there, that's the topmost red arrow, is where you would have gone short the stock, or at least got out of the position because the breakout was failing. Okay, so notice how the 10-week moving average really bends for Apple, and then the crossover takes place at about 575, somewhere around there. So as early as, let's call it December of last year, this stock was a sell. So you would have really been out of the stock and saved yourself a lot of trouble. You would have shorted this stock. And you can also, now I was publishing a lot of videos on YouTube discussing this idea because I know it's very popular, and I talked about the fact that I thought the stock was in trouble and it did fall, not because I'm a genius, but because it was meeting some of the requirements we are talking about here. So notice the weekly break point took place here in December. There was a weekly, this arrow here I show in December, November time frame. Apple broke down there and never recaptured that red line. It broke again beginning of 2013, and it's never been back to those levels since then. So this is the kind of thing I'm talking about. Okay, so let's move on here. Most recently, stock that was doing the same thing was IBM, and I posted this. This is just from my stock tweets account, and the reason I'm just showing you that this is something I use and it works. IBM was trading at about 191. Show you the weekly. Notice the weekly here for IBM, and the reason why I thought it was a short. Failed breakouts early on in spring here, failed breakouts above, let's call it about 208. It failed to hold those levels. So it was a first red flag. There was a crossover, bearish crossover between the 10-week moving average and the 13-week moving average, and then there's also the bending of the 10-week moving average. So all those things, and not forget this major trend line, the gray line. IBM was breaking below that. So my price target for this stock, quite frankly, is about 156, which would be 61% retracement from the lows of late 2008, 156, or maybe a secondary price target of 138. Okay, let's take a look at one more IBM chart. It's a current chart here. You can see ever since I posted that, it's really been getting very close to this 170s level. So it's taking place. It's breaking down very slowly. We see now that the crossover has been confirmed. Everything here points to IBM for now, showing that it is really going to be weakening over time. Okay, so now this is the current chart for the S&P 500. I saved this a couple of days, so it doesn't reflect today's closing price. But you'll notice that as of right now, the S&P 500 is starting to show an early sign of a bend. Now, the market has not turned bearish yet. Why? Because we haven't seen the crossover of the 10-week moving average and the 34-week moving average. Until we see that crossover, we cannot necessarily become very bearish as far as this name is concerned. So let's also just remember that we are seeing the first sign of trouble here for the market with this bending of the 10-week moving average. There was also a failed breakout, and let me show you the same chart but now from a closer perspective. And this is the S&P 500 weekly chart again, but shorter time period. This is just for the the calendar year 2013. Notice that we have a failed breakout to hold 1667. The market failed there. That was our first sign of trouble once it failed there. And then it settled down at 1655.83, tried to rally, and then came back and broke that. Once it broke 1655, that was another sell point or reason to get out of the market. Right now, the lowest weekly close for this year is 1632. What I'm saying here is if the market breaks below 1632 on the S&P 500, at some point, that would be a time to initiate short positions again. So watch this level, 1632, for indication of where this market wants to go. If the market recaptures 1653 or 1667, the previous failed breakpoints, then maybe we might start warming up for the market to move higher. Okay, so as of right now, given this chart in front of you, would you short this stock? Now, I hope the answer is no, because we don't see any failed breakout, we don't see any bending of the 10-week moving average, we don't see none of that. So be patient. If you want to short this stock, just let it do its own thing. At some point, it's going to become a short. So, you know, that does get very close to the conclusion. Hey, Kyle. You there, Kyle?
Yeah.
Hey, okay. Okay. Hey, so I'm going to show you where I am at traders, and Kyle is going to come in here because we do want to. I want to point out I recorded an hour-long video, very detailed video, which is going to be part 2, a continuation of this webinar, because there were so many examples in part 2 of the video. And if you're a subscriber, you're going to get this video. It's going to be uploaded immediately after this webinar is done. I'm going to send this video to all my subscribers. I'm going to go into detail with lots and lots and lots of examples. Like I said, it's a 1 hour-long video where I go into detail with lots of graphics, and I go further into details. Plus, it's important, I also talk about 1 or 2 other things that are very important visually that I did not mention in this webinar. So subscribers, wait for that video to come in your inbox. And if you're not a subscriber, you might want to subscribe to watch, because there's something, a very important technical aspect that you all need to know. So though we are all trying to be in the market, trying to Hey, Kyle, are you there?
Yeah, there we go. I took the screen over, but I think that video was messing up the audio a little bit. But
okay, sorry about that.
Kind of no worries, buddy. And I'm going to go over, because we got a bunch of questions coming in for the subscription. I got Eric's package up here, and I talked to Eric earlier this morning, and I asked him, you know, look, you just came onto the platform. I want to get a lot more subscribers to your offering, because I think it's so awesome. So he allowed us to put together a couple of packages, or I should say a few packages, that we're going to offer here, as you can see. So let me go over the what you get, and if you have questions, please just let me know. With the packages today, you're going to be getting the Educational Trader, which is $69 a month. That is Eric's Trade Alert subscription that he keeps talking about with all of his members. Now, Eric, how many trades on average do you make a week in there?
I'll be honest, I haven't been making a lot because I'm expecting the market to do something here. So I would say, you know, I try and keep it as minimum as I can. I think the best answer to that question, quite frankly, is I would say a couple every two weeks or so, because cool. And look, it's very important. We are all traders here. I could change my mind today if things change. So what I'm saying is I don't know, because the conditions in the market are going to dictate the frequency of trades and the size of the trade. So that would be my best answer.
And look, trading more is not trading better. Trading better is trading better, and that means taking opportunities when they come.
I love that. Yes.
So you also now something else that we're going to be adding in is Eric's top trade pick video. So he's going to be sending you after this to all subscriptions today. You're going to be getting that video going into much more depth, much more examples, and learning a lot more about a strategy, along with getting 3 months in the silver package to the Educational Trader. Okay. On MarketFi, you also get direct messages with Eric, 24/7 support from MarketFi, and along with our guarantee, obviously, that we're picking the Maven. Okay. Now that first package, the silver package, includes those top 4 things: 3 months to the trade alerts. The trade alerts that, as you had seen, right, we just went over it. The trade alerts have been doing so well, and people are making money off of. You get all of that. You get all of that plus the top trade pick video. That's typically $307, but for everybody today, and I'm going to drop this link in the chat, that's only $107 today. Okay, guys? So check out the chat right now. I'm dropping that in there, and that's going to be $149. Go check out that. If you want to upgrade to the gold package, you're going to get 6 months to this trade alerts, 6 months to the Educational Trader at $69 a month. You're also going to get everything else in the silver package with the top trade pick video, the messages with Eric, the 24/7 support. but you're also going to get 2 hours of private coaching with Eric. I can't tell you how many people come onto the site and they buy a Trade Alert product and they don't understand it, they get all frustrated and they cancel. And when I get on the phone with them, I say, hey, what's going on? And they say, just don't understand it. And I said, well, hey, how about this? Do me a favor. Take an hour and I'll give you an hour with the Maven. Go talk to them and then see what you want to do. And it was just a few things they needed to tweak to make money off the trade alerts, because you see the verified results. The trade alerts are making money, and so can you, okay? So the gold package, you get 6 months of the trade alerts. Everything else is in the silver package, but you also are going to get a couple hours of private coaching with Eric at $200 an hour is what he charges. That's typically $914, but for the webinar today, you get $349 with the code Big Gains. Okay, so I'm going to drop that one in the checkout. Or I'm sorry, in the chat right now. So check out the chat if you want that gold package. You want the 6 months. Go check that out, because you will make money with Eric if you follow the strategy, you stay disciplined, and you keep your patience. Okay. Now the last package is the diamond package. This is, you know, a lot of people in here know Eric. They know that he's, you know, how great he is. They follow him on Twitter. They've watched his commentary and analysis, and they absolutely love his strategy. The educational trader, you're going to get 12 months to his trade alerts. 12 months. You're also going to get everything else in the gold package, and then you're going to get 6 hours of private coaching. Now let me tell you why this is awesome. If you're sitting there, and then this was me probably a year ago, maybe 18 months ago, I had, you know, whipped through a bunch of strategies. I had, you know, I had a bunch of subscription newsletters, being, you know, here at Benzinga before we started MarketBuy. You know, we started MarketBuy a year ago, and I couldn't figure out why I couldn't do it. You know, I kept sitting there and I couldn't figure out why I wasn't making the money, even though they were. And I talked to customers that were making money, and I couldn't do it. And this is what kind of changed my perception of all of it. And it was sitting down with the guy that was running the newsletter. It was one of the first guys we had on MarketBuy, and really just walking through the trades with me, and I saw what I was doing wrong, okay? And he set me up on the right brokerage so I wasn't getting killed on commissions. And he set me up with the right screen and tools to make sure I was making money. That's what you're going to get in the Diamond package. An entire year to make our Eric's trade alerts, and then 6 hours of private coaching at $200. Right there, that's $1,200 alone. And for all that, which would be a total of $2,128, so $2,128. Today it's going to be $8.99, and that is a huge value, a huge value. And the coupon code for that is Huge Gains. I'm going to be dropping that link in there right now. So go check out your chat. All 3 coupon links will take you directly to the checkout page, and it'll automatically apply the coupon to the package you're looking for, okay? But you can see all 3 coupon codes down here as well. You know, one other thing that I want to real quick go over is, you know, MarketBuy is here for you if you need phone consultations, if you need help, if you need anything. We have live chat, and I'm also throwing our phone number right into the chat for you. So it's 877-440-9464. Call us up if you need any help. We're always here to help you guys. Even if it's, you know, you want to talk about the markets, we love talking to you guys. We love interacting with you guys, and we love seeing you guys grow as traders, and that's truly what we're here to do. So, Eric, you wanna pipe in on anything? Anything else you want to add?
Yeah, I also want to remind everybody, remember I have an hour-long video going into detail about this, when to sell winning stocks and winning markets. I really spent a lot of time getting that video ready. It's an hour long. I really go into detail, and also don't forget, I have my best short ideas right now. Trust me, I really spent a lot of time trying to decide which out of a group of stocks were the best based on my experience, based on the setups, based on the things we talk about. Plus, and this is important, plus I also share with you another secret of what makes stocks move. And I'm not talking about stocks, I'm talking about major markets, major currencies, major commodities. Why do they suddenly drop? If you are ever surprised that you are owning a stock and just within 3-4 months all your gains have gone, what changed? I'll show you precisely the one simple technical aspect. So you need to get that video. That video is going to go out here in about 5-10 minutes after this webinar is over, and I'm excited to send it to subscribers. So if you're not a subscriber, I encourage you to come, if for that alone, that it's going to be worth the price of admission. Kyle.
Absolutely. Absolutely, Eric. Absolutely, buddy. All right. everyone in the room, let's take some questions. I know we got a bunch coming in, so everybody be patient. You know, we'll try to get to all of them. Eric, I got a question here from Jane. She asks, what do you think with the tapering coming up? What's your sentiment, you know, with where the economy is going to go? I know we kind of touched a little bit on that, but can you go a little more in depth on that?
Kyle, no. And the reason why is I think the market is going to decide, and just because the best way I can answer that is I look at the market from a technical aspect. I'll take what it gives me, and I'm not very good at reading the tea leaves in terms of the fundamentals. They seem always very confusing to me, but when I look at the charts, and whenever the charts seem to speak loudly, and ultimately the market is going to follow the direction of, you know, fundamentals are going to move the market, the technicals are going to show it, and we're going to act on that. But do I know what the you know, geopolitical issues are going to, how they're going to move the market, tapering, and all these things? I don't know for sure, but I do know that the market is going to show its hand at some point.
Jacob asks about what positions you have on right now. Jacob, that's for subscribers only. I know Eric and I were talking about it beforehand, though. And Eric, you said you had 4 positions on right now, correct?
Yes.
Cool. So there's 4 positions in it.
Yeah, and I'm thinking of putting on a 5th one. There's one that I already talked to my subscribers about it. There's one that I should be putting on here in a day or 2.
So it's a perfect time to get in. Get in
Absolutely.
on the action. And
yeah.
You know, when you're a subscriber, Jacob, you will actually have access to Eric, so you can talk to him about his current holdings as well. Stephanie asks, Eric, are you long and short?
Yes, right now leaning short.
Cool, perfect. All right, just a couple more questions here, guys. We're going to get wrapped up in just a couple minutes, so make sure you get these packages. I forgot to mention, too, they do expire tomorrow night at midnight, so Friday night at midnight Eastern time. We do cut off the coupon codes. We don't let these things go on forever. So if you're looking to get in, and if you're just looking to get, you know, educated, right? If you're just looking to, you know, really find a strategy and put tools in your belt that can help you make money, get involved. You know, the big thing, you're sitting there, get off the bench is what I always tell people. You got to get action creates reaction, okay? And you got to get in the game. And I mean, his next pick alone, Eric's next pick alone, is worth it because you get to learn and you get to follow somebody that's making money and you can learn how to do it with him, okay? All right, one more question here from James. James asks a little bit more about the tools you use. Eric, can you go into, you know, some of the indicators, you know, you work with on your technical analysis?
My main indicators I use the RSI. I really love that indicator, and then the MACDs, and I try and keep them to those 2. I do look at others, but quite frankly, I need only those 2. I can do with those 2 only. So the MACDs, and I use 2 different settings for the MACD, not just one. And then I also use the RSI. If there was no RSI, I'd probably have a problem trading.
Yeah, I agree. And you know, Eric, one other thing I want to mention too is I know you talked about your video that you send out, but I mean, you do more for your members, including teaching about those technical indicators, don't you?
Yes. I encourage subscribers to talk to me, call me, let's talk, let's open the communication lines. If you have a question, stock you wanna own, you wanna own, you're thinking about, talk to me. This is what I do for a living. I've done this for 12 years straight. I would rather talk about nothing else. So don't hesitate at all.
Oh, it's fantastic, man, and that's why you're on MarketFi right there. I'll tell you that. So, all right, cool, guys. We're gonna shut off the recording here in just a couple seconds, so we can get it over to you as quick as possible. And you know, the longer we record, the harder it is to upload. So we're gonna stop the recording. But if you guys have any more questions about the product, I'll stick around. So feel free to continue to ask. But Eric, thanks a lot, buddy. I'm really looking forward to continuing this relationship with you on the site, and I'm really excited for the subscribers to see that hour video. I watched it the other night, and I love your strategy, and I told you that from our first conversation. So
thank you, Carl. Appreciate it, and I do thank everybody for showing up. And let's keep this conversation going. Thank you, guys.
All right, cool. John P, ML, Jacob, Stephanie, all you, Jane. Thanks for the questions, and really appreciate you guys showing up. We're going to shut the recording off here, so I'm going to stick around if you have any more questions. But Eric, thanks a lot, buddy. We appreciate everything.
Thank you. Thank you. Good luck, guys. Good night.